Good evening, all. Ira Epstein with your SPDR ETF wrap-up for a pretty interesting day this Monday, and this is the 28th of March, 2022. Well, no matter what takes place, one of the things that seems to be going on is the market doesn't care. It has just decided that, hey, everything still points higher in the stock market. Where do they think they're going to take it, is my question. Is this the environment you go up to new all-time highs? I don't see it. But I'm also questioning this distribution area that we're getting here. Could it be building a level to move even higher from? I don't know. I watched oil get hit hard today, and I'm watching everyone talking about BITO, Bitcoin, all the different types of, if you will, these cryptocurrencies that are out there. And there's a lot going on. You know, the one thing we have to understand is that the marketplace is now embraced it as an asset class. We're probably going to see the SEC do some things with it too. I expect that to be any day now. I've been reading about how Mr. Gensler is looking at these, and we'll see what goes on. But there's going to be more products from what I can see. When I look at BITO, it's relatively new. This is the ProShares Bitcoin strategy. It's the daily bar chart. But look at this. This market has been going basically sideways since the beginning of the year, between here and here, just drifting. And all of a sudden, the market has been coming alive, along with Bitcoin, which has gone from the mid-30,000 range back to the $45,000 level. And as you can see, you're breaking out again to the upside in this market. When I put the swing line study on, you have higher lows, higher highs. You're over the 18-day moving average of closes. The market had been trading inside of the Bollinger Bands from the upper to the lower band, concept there, and now you've just cleared the 100-day average. You're probably going to say, Ira, where's the 200-day moving average? There aren't enough days yet. This is a brand new vehicle. So we've got to get to the point where I have at least 200 days where the market can work with it. I can tell you this much. You're in an overbought territory, over the upper Bollinger Band. The odds favor this market's going to pull back into the band within the next several days. AMC, I haven't talked about this in a while, and the Mimi boys, those Robin Hood boys, they're back in town. Whoa. So what did they do? For the longest period of time, if you'll recall up here, and if you're a viewer of mine, when the market got up here, and this is when AMC was letting out corporate debt and people were buying it up, I said, this is a sucker play. And the only reason I know that is I owned a movie theater, so I understand movie theater business to a degree. I don't run it every day, but I don't see how they make money. That's my biggest problem. They used to be the event in a shopping mall, and that's where you go. They were the anchor for that. The problem is most lost money, and if you look at the balance sheets, I don't know that that's radically changed. They need a better business model. I don't know what that is. Maybe they bring in sports betting in them. I don't know what they do. They got to do something. But in any case, you were going sideways here, and remember, this is a market that had just come from in November, being at $45 a share, goes back, loses 2/3 of its value plus, gets down to the 13 mark, and people don't learn their lessons. So the market starts coming up, and you know in the past week we've seen these, I like to call them the boys are back in town, the Mimi boys, as I like to call them. It's like calling Dogecoin. It's Doggy Coin, D-O-G-E-C-O-I-N. It's not Doge, it's Dog-E-Coin. Well, this is Mimi boys. And what they're doing is running the stock. You might get back to the 200-day average, but you're on a stilt here. And at the end of the day, maybe, just maybe, that is the bottom of it. You know, as a chartist, I can't argue that. I'm not a fundamental trader. I understand the business, and I mentioned it because I didn't see how they were surviving then. Maybe things are changing. I have a very open mind that this is a base in that market. Apple's fighting up here at the upper Bollinger Band. Today's news was they're going to take their base phone and have to lower the price. You know, you're reaching a point where these phones become a commodity. And I think Apple is beginning to see that unless they get something revolutionary in the newer versions. I personally don't think 5G by itself was enough to get people to convert over. They're selling them. Probably half the phones that are sold today are 5G phones. They'll get on it, but what's different about that? I don't know. In my home, I have such fast internet, and I'm home most of the time because of the COVID situation. I fly on everything that I do, so I don't know. What I do know is that $1,000 for a base phone is a lot of money, so maybe that price has to fall back, and the stock is acting good with that. In the financial section, okay, you're in what I call this distribution area. You are fighting, as I said, and I've been saying it for a week and a half, between the 200 and the 100-day average, but the bias is up. And what do we have? If you take a look right here, the slow stochastic readings were not both over 79 last Tuesday, but on Wednesday they got there. On Thursday, come on, let me do this, they got there, and on Friday, that's an embedded reading. So that tells me the pros are going to buy breaks in this market until that 79, until the market closes on the red line under 79, and the upside target is the upper Bollinger Band. That's basically what I'm seeing in the market. Disney has been slipping back to support at the 18-day average of closes. It is overbought. If it closes under the 18-day average, I see a bearish trend developing, but the way it's going right here, no. As long as it stays and closes over that 18-day, it's digesting what's going on. In XLI, you have an embedded reading. I contend that the pros are buying the breaks in this market, looking for a pop back to the 18-day average until there's no reason to do so. Now, we saw today certain metals get hit. If you looked at the palladium market, got smashed on $180 or so an ounce. We saw platinum market come down, but copper was up a little bit. Gold is just acting terrible. I don't know what else to say. You get a war. You have interest rates, you have inflation that's been out of control, all these uncertainties, and it can barely hold rallies. It's back where it was. I was just reading this. I didn't open the charts up on it, to where it was about 2011. In other words, it hasn't gone anywhere from that peak that it saw then. That's not the prettiest action you could see. When I take a look at XSD, the semiconductors, they're trying to hold and fight their battle at the 200-day average up to the upper Bollinger Band and the 100-day. Here, too, you're starting to embed. So this fever, as I want to call it in the stock market, it either ends with the market adding another level up here and carrying these markets to this zone, or this is a trap on the bulls. You're getting everybody bullish and they pull the carpet on you. I wish I could tell you which. As a chartist, this is bullish until it loses that momentum. I'd rather be on the side and be wrong, but I want to be in a trend. So the breaks down here are still buys. When the red line closes under 79, I think you want to be out of the market. The home builders are facing the pressure, obviously, of high interest rates and the like. Lower highs, lower lows, still falling down there. XLE, you've got the higher lows, higher highs, but now you broke today something important. This is an outside day up. For all purposes, you were knocking on the door of the upper Bollinger Band, and logic would have said, okay, you'll hit that today. What you can't afford to do is take out the low of an outside day up within 2 trading sessions. If you do, typically, I'm not going to say the word all the time because it's not accurate. Typically, that means you've got a bull trap and you're going to get back to the 18-day average to regroup. I think that's what you're going to see this market do right now. Gold, what a miserable state of events. Here is a market that I was hoping would fight at the 18-day average, not hang around. So this is where we were on Friday, and very frankly, I was hoping to see the market get over 183.51 and say, the market's at the point here where it was oversold, momentum will turn up, you're over that, the door opening for 189.12. I did not expect the market to break back the way that it is. Am I telling clients in GLD to be long? Well, there's nothing here to be long from, that's for certain. GDX, though, I did. I did tell people, hey, I think this is the support zone. I don't think you want to get this market under 37.25. So today was the day around the 37.80 area that I think traders took a fresh look at it and said, if it takes that out, got to go back to the drawing board. More important could be that all of a sudden, if you notice the Bollinger Bands, they're wrapping their arms very tightly around trade, and we're liable to see sideways action develop. In the copper market, you've literally gone from a Bollinger Band bottom to a Bollinger Band top, and you're embedding in the process. So, day 1, 2, 3, you're fully embedded. What does that tell me? It tells me on breaks like you're getting today, there are pros buying the market. I think they'll bail if the red line closes under 79, and until then, they'll continue to look for higher prices. TLT is still looking to me as though it's short sale time in the market. Get a close in the red line over 21, I change my opinion. I tell my clients to come out. But on this, I've been telling them, hey, it's still looking to me on the bear camp. The dollar is still looking bullish. Upper Bollinger Band 2660, you got to 2656. You got pretty darn close. You don't let money slip through your hands. So that is all that I'm looking for in this rally. It's not embedded. It's getting quickly overbought. And last, in the euro, the market's got momentum pointing down. The trend is down. You've got lower highs, lower lows, and you're underneath the 18-week moving average. So what it's going to take is the market getting back over Friday's high right here, 102.21, to break this pattern. And until it does, you have the possibility of going back to 182 to find the support in the market. Now, if you're like me and you like to look around these markets, see what to do, I have a whole slew of things you might want to look at. If you go to our website, www.iraepstein.com, you will see all our offerings. But I'll make things very easy. If you take your cursor, just move it up here. Our icon will appear. Click on it. It's going to take you right to the site. Go to free offers. Learn about things there. Look under education on the site because you'll see a lot about my enhanced Bollinger Band course and the other courses that I teach. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.